Greetings, members, one and all of the Salivation Nation. I have with me Lior Gantz from Wealth Research Group, and we're going to be talking about silver today. Silver's price is taking another slump. It's a late summer slump, as I had predicted in an earlier video. It's barely hanging above $23 an ounce. And there's a lot of factors that are coming into play that I've talked about on the channel, but we have Lior Gantz here to help us break this down and answer a question that many of us have in our mind. When is silver going to break out? When will it, and what would it take for it to explode? So, Lior, how are you? And what do you think about where silver is now?
I'm doing well. You have a situation where precious metals, as a group, so gold and silver, are reacting to a bit of overestimations in terms of interest rates that have happened over the past 2 weeks since Jackson Hole. The Federal Reserve, as well as other central banks, have already done a lot, unprecedented amounts of interest rate hikes over the past 2.5 years. And as you can see, the interest rate sensitive parts of the economy, meaning housing, for example, or companies that have to raise money in order to grow their business model. So either they're losing on the bottom line or they're pre-revenue. These have all collapsed. Mortgage applications are at 30-year lows. Activity in the housing sector, so the amount of transactions is at a multi-decade low, and obviously mortgages are nearing 8% for a 30-year mortgage. The interest rate sensitive parts of the economy have been the greatest and most impacted by interest rate hikes. But other sectors of the economy, stuff that the Federal Reserve cannot fully control, oil prices being a very clear example of this, are not coming down. And in fact, oil prices are going up a year-to-date high, and they're nearing $90 a barrel. So what you're seeing is, on one hand, you're seeing CPI coming down, but CPI isn't the economy. And on the other hand, you're seeing food and energy costs going up, as well as shelter. So the American consumer, 70% of US GDP, is hurting. And all of the excess savings that the American consumer had because of COVID stimulus have now been depleted. In other words, this is where, in the next few months, we see what sort of recession we are entering. Because China is already slumping bad. Europe looks very weak, and it basically was the U.S. economy that has been the engine for the last year. So now that you're seeing this terrible weakness in China, very weak economy in Europe, and the United States joining them, we will now see how much more the Fed can keep interest rates high and higher as they see the pressure brewing for the economy. And that's where the situation with gold and silver may change, because silver, let's put it aside for a second, gold is above 1900 an ounce even after you've raised interest rates to over 5%. That tells you that when the Fed either pauses or begins to cut, currently forecasted for June 2024, the price of gold is going to go a lot higher, because you still have so much inflationary forces in the economy, and there is a limit to how much you can keep interest rates high, because you're killing the housing sector and the regional banks. So there is a finite amount of time that they're able to keep us here. Imagine taking your daughter to see her favorite performer, and this is something that has happened to me. I've taken my daughter to this performance. She can't wait. She talks about it all week. And as we get there, the announcer comes on and says, there's a delay. There's a 20-minute delay. Okay, that's fine. Let's go drink something, come back, 20 minutes. Then he comes in and says, we don't know. It could be a little more. It could be like 40 minutes. Then it becomes an hour. You're trying to get like first row standing, so you can't move. Your girl is on your shoulders, you're hurting your back, but you're going to wait because that is her favorite performer. So you're going to wait as long as it takes because you know she's coming. And then once she arrives, your daughter forgets all about all the time she has to wait. And that's exactly how the market behaves right now with gold. Everybody knows interest rates are going to come down. Everybody knows this, but it's very unpopular to make bets on this because the Fed keeps telling you that they will need to keep raising rates and keep them very high. But smart money, so the bond market is already forecasting cuts in June 2024. That tells you that they are buying in advance. This is about gold. Now let's talk silver. For silver to really move, it normally moves after gold. My assessment is that only after gold breaks the all-time high of 2,069 an ounce will you see silver following it and going over 30. So for now, I believe that gold will outperform silver as we move into this environment where the Fed is going to be less hawkish and will need to capitulate and allow the economy to start moving again. You just cannot continue to put a lid on inflation as you have done for so many months. If inflation is what is the overarching trend, the Fed cannot stop it, just as zero interest rates in QE to infinity did not stop deflation in the previous decade. It stopped us from going into a deflationary spiral between 2009 and 2011. But once 2011 rolled by, it was obvious that the Fed, no matter what it does, cannot stop deflationary forces. And it will become apparent that they cannot stop inflationary forces during this cycle. So I think that we will continue to be in a higher than normal interest rate environment with higher than normal inflation. And that's where gold will really excel and silver will follow suit.
Yeah, because we're seeing in the latest CPI numbers an uptick of 0.2% last time. Now they're forecasting another 0.2% increase in CPI. And I know you've kind of separated those out from the economy, but it just goes to show you that what the Fed is doing is having a marginal or not much impact at all on inflation. You look at the Fed Watch tool, and last I checked, it's about a 93% chance that the Fed will pause in the upcoming meeting in September 19th and 20th.
Yeah, and they'll skip.
They'll skip, right, okay. Yeah. And what's the difference between skipping and pausing?
Pausing means that there are no further interest rate hikes, or at least that the market doesn't forecast any further interest rate hikes. Skipping just means that the market believes that they'll skip a hike in September, but they'll most likely raise in November.
Okay, right. With that being said, then November will have another rate hike, and then fast forward to June of 2024. That is going to be the environment that you just had mentioned where gold is going to really break out. And you're saying that if gold reaches its all-time high of $2,069, silver will follow, maybe delayed, and that's where we may see silver explode at that point.
Yeah, I think that gold will move first. And once we have a confirmation that gold is in new territory, all-time high, which I believe will happen in the next few months. We are entering a very bullish environment for gold. There are so many elements of this that are happening. If you go to wealthresearchgroup.com/gold and download that report, it's full of catalysts that we see once every 15 years, 20 years, 25 years, even 30 years that show that gold is in an incredible spot. That's why it's just like in that example that I gave you. It is 100% looking like gold is going to a very strong bull market with 2,500 probably, in the next 14, 15 months. And above that, it can go to 3,000 and go to 3,500 during this bull market. And it's just a question of when and not if, just like that performer was late, but she made it. The show happened. Your entire adjustments here as an investor is how long you care to wait, how big you want your position to be, and not thinking defenses right now. Because in my opinion, we have the perfect situation in terms of China's economy being incredibly weak and how that will play out to China's stimulus. And then on the flip side, you have a US economy that's slowing down into an election year, which means that the Fed cannot be as hawkish as it would be if this was just fresh after an election. That's one thing. And secondly, as you can see, the housing sector doesn't solve its real problem, because in a high interest rate environment, home builders are not doing what they're supposed to do. We have a shortage of starter homes. We have a huge shortage of starter homes. Millennials are getting married, they're having kids, and they cannot purchase homes because of high interest rates. And builders are not building the type of homes that they need. They're building the type of homes that corporate investors want them to build, homes that are ready for rent. That is just not the right structure for the economy. When the Fed understands that it is creating a rental bubble, literally, the wrong type of homes are being built, it will have to start moving towards a normal interest rate environment where mortgages cost less than rents. Right now, the median home price in America is $406,000. Your median income is about $4,000 a month. And if you want to originate a mortgage right now, the median is about $2,600. Rents are about $2,000. Obviously, everyone is thinking to themselves, if I'm going to buy a median home, I'd rather wait. I'll rent one. Only when interest rates come down, or when the supply of homes increases and prices come down from 406 down, only then will you have a solution. I don't foresee home prices coming down. I do think that the only solution is for the Fed to start relaxing and for everyone to deal with a few more years of inflation, because there's just no other way. You're just delaying the inflation and not solving it. There are many forces in the global economy that are truly inflationary, and no central bank can break them unless you do something like Paul Volcker did, and that will create a severe recession in the United States. I don't think Jerome Powell is cut from the same cloth that Paul Volcker was. I think that the United States is not in the same position to drag the entire world into a recession like it was in 1980, when it was the absolute only global superpower, except for the Soviets, but they were not part of the West. And so I don't think that the Central Bank of the United States has the same amount of leeway to do something like that. That, in my opinion, is the reason that the Fed will capitulate before inflation is solved, and we will see a resurgence of inflation. And that is literally the reason that gold will go higher. That is also the reason that stocks will underperform, because if you, again, have inflation, then profit margins and bottom line income will go down.
And we touched a little bit about a recession. It sounds like that it's unavoidable, at least at some level, and that typically hurts silver. And we may see the ratio between gold and silver stay where it is or widen. So even if silver follows gold, it may not follow, at the same rate. Or usually when silver is more volatile and it reacts more dramatically, but the recessionary pressures may keep it from doing so, which would prevent an explosion, if I'm assessing that correctly. So what would it take, with that being said, silver being primarily an industrial metal, for silver to actually explode in price?
Well, keep in mind, it's an inflationary recession. In other words, the level of panic and fear will actually accelerate, and we might see more Wall Street money hedging in silver, as they did in previous inflationary recessions. Don't make the linear thought process that recession equals people selling their silver. If you look at exactly what's coming in an inflationary recession environment, stocks do worse than precious metals. And I think that silver actually has a chance to stay very stable above the 20s. And like I said, once the market believes that the Fed rhetoric is no longer valid, and even if they say that inflation is too high and they need to keep interest rates higher, that they will still need to loosen and cut at some point because of distress, either for regional banks, office buildings, meaning commercial real estate, or otherwise, then that will be very bullish for precious metals.
An inflationary recession is something that I think we should look out for in order to make wise decisions. And I know you put out a publication. You've mentioned one on your website, Wealth Research Group. I know you've done several, and you do analysis on the market. So people should go to that website. I'm going to post a link in the description below. Do you have anything else you want to say in closing with regards to Wealth Research Group or silver?
During 2009 to 2011, in the reflation trade, in other words, everyone was making the judgment that, hey, interest rates are zero and the Fed keeps pumping money. Therefore, we will have hyperinflation. And everyone put big bets on gold and silver. That reflation trade sent silver from 9 till 49 an ounce from 2008 until 2011. And then silver fell from 49 all the way down to just under 12. That was December of 2015. From there, silver exploded and more than doubled until it reached just shy of 30 and then dropped again. This is all paper silver that I'm talking about. Dropped again to 12, then resurged to just over 30. And now it's settling over 22, over 23, where the big support is for it. I think that the story with silver is that in the last 2 years, since the Fed has made it clear that it wants to tame inflation, the story of silver has been that, hey, how can silver rise in an environment where the Fed is raising interest rates? And that's why it hasn't gained any traction in the last 2 years. Once, just like in 2011, when the market realized that hyperinflation is not the future, but deflation in the future, and people sold off big silver from 49 to 12, I think the same thing will happen, but on the reverse. In the past 2 years, people have mistakenly thought, Wall Street has mistakenly thought that silver is not an important metal in the world that we are moving into because the Fed is going to keep interest rates very high and it's going to gain control over inflation. Once they realize that's not the case and that inflation will remain well above the 2% target for many more years, could be 4, could be 5, could be 6, all the way to 2030. You just don't know. Once that realization happens, then silver will become a very important hedge for Wall Street in this high interest rate environment where they know that the Fed just doesn't have the tools to deal with this. That this is a global problem that is bigger than what central banks can mitigate. And I think that is the real story here. So it's not whether or not it's going to go back to 30. It's how high it can really go. Can it go to the 50s? Can it go to the 60s?
Thank you for your insight, as always, Mr. Gantz. And I want to extend a multitude of gratitude to each and every one of you for taking the time to watch and encourage you to please rate, share, comment, and subscribe.